Hi, Warriors. How's everyone doing today? Want to welcome our viewers from investing.com. Hi, Brock. Martin, the reason is you were 1 hour early. Okay, we've been starting at the same time. Maybe time changes have you confused. They confuse me too. Hello, Shahab. Okay, well, we're getting ready to wind up this week. Couple days left of trading. We have Tracy Schubert with us today at Shy Girl. And I keep looking at this crude. It looks like a mess. There's a 1 hour. There's a 4. I lean towards this as some kind of distribution up here. It really hasn't participated much in risk with the S&Ps making new all-time highs. So the question is, if it really can't perform with the S&Ps when they're going up, what's going to happen when we get a correction in the S&Ps? And the S&Ps aren't much higher on the week. Again, we need closes. Well, if you're bearish, you want to see closes back under this throwover line, which comes in mid 60s or so, 68, which there's confluence with the 2-week off number. I tweeted about it. By Friday, it closed back under, say, I believe it was 3069.90. Let's call it 3070. Would be a 2-week reversal. So plenty of time if it's going to happen, not making a lot of upward progress. I mean, you look at a 1 hour chart, it only fills up half the chart box. So crude and doesn't look similar to what's happening here. You know, range, tight range. That's S&Ps. And this is crude. So you have ranges, and what can happen here is, we could try and break out of the range. I was still thinking there was a chance for us to try 61.8 here, 58.5 or so. And we're not that far away from today's high of 57.75. So we're like a buck away from 61.8. But it doesn't have to get there either. I would say back under this moving average here on the daily, 560 is going to be not a great sign. Similar in S&Ps. Again, the throwover line, but if you even get real short term on the 15-minute chart, or maybe it was the one when we were trading 380 last night, I think this may have been it. So we rallied all the way up here, and this moving average, look how it's sitting here. So be careful if we start trading under 90 or 88. This is very short term at the 15-minute chart. If you want to trade off 15-minute charts, you're going to make your broker very rich. But I do look for, clues. I admit I go down to this TF. Sometimes I might have divergences on longer term time frames. I'd like to see them line up minimum at a 4 hour, and I like to see the 4-1 and even the 15-minute line up. So we'll see what the S&Ps can accomplish here. Since the full moon, we made an attempt to make a new high. We haven't made a new high yet. So we'll see if we just roll over here. I thought there was going to be some type of announcement on sanctions or tariffs, on the EU, on their cars. I thought it was mid-month right here around the 14th. I haven't heard a peep about it. So maybe we don't need that diversion right now. Yen is approaching. I talked, Skyped Amanda yesterday and was asking her for her downside target in the yen, and she was talking about a lot of confluence here at 108.50, and as you could see, there's a trend line around there. Okay, this was a pivot point here. We have some moving averages here. So if the yen's going to hold, it better dig in its heels here pretty quick. And, all the people that are looking for higher yields right now, let's see if they're on the right side of things too, because yields continue to drop with the end. So if the end's going to hold, we should get one more rally in yields. There's your 10-year, there's your 30-year. And then again, here's your trade war currency. And Steve pointed out, I think it was on a daily, that this was a very important area right here. Pay attention to everyone here during the day, but Steve spends the most time analyzing things, right? And, look at this. So Steve pointed this out, that it was a very good risk reward right here, testing the breakout. That looks like a breakout test to me. And we'll see if we start to head up here, you're going to have trouble with risk. Okay. And it's really going to be the key. And then the other important one, something I was talking about yesterday, I learned under Blake kind of gave me a cue on this, and we were trading down here, and with it being a risk off currency, I think I even Skyped Blake about that. Looked like, maybe this was an early tell that risk off might be coming, but, pretty good action here in the peso. Maybe if you get some type of pullback here, I think 1930 should be well supported. I don't think you could, if you bought it last week, this is what you do. So you book part of it, right? So maybe you got it in here. And Paulie was talking about this 1924 resistance, okay, which it failed from a couple of times. So if there happens to be any kind of pullback in here, if we get some type of ABC between 29 and 24, I think you have to try it, because when you look at the weekly, looks like it's trying to come out of here with the bully bands pinching. So if I counted a 1, 2, 3, why can't we, if we get, say, a 5% pullback in S&Ps, trade up here again? So for risk off, you're never too old to learn and grow. So, I never really paid much attention to the peso unless I was doing shots of tequila in Tijuana or some other place in Mexico. But looks like it could be an early indication for what might happen with risk. So always learn. Abel Lopez, how are you? Nice to see your name. So keep an eye on what's happening here in stocks. Again, a lot's going to depend on what happens with yields. It's really not that bullish if this was it in the 10-year up here. And we're getting pretty negative week here, so maybe we're not going to see 220 and we're just going to wash out here. I would say if this happens and we're going to wash out and take out historic lows in the 10-year yield, just like we did in the 30. See, the 30 did it. They took care of business down here, right? And this looks like a pretty classic, little ABC. So this should be, if we're going down, this should be bearish for US dollar yen and bullish for gold and silver, which are both trying. Decent week in gold, not quite an off number sell, but nice little reversal in gold. And silver looks like it held on a pretty important level right here. So it's our mission to build you up, edify you every day, traders. I know our name is Forex Analytics, but as you can tell, we cover other instruments, and pick your poison. We have a lot of coverage across the board. Platform's designed so you really don't have to go anywhere except your trading platform to trade. You could set up your own Twitter feed here, right? Okay, you could have all your alert histories. You could even leave your house and know that if something's going on, you're going to get push alerts on your mobile. So the team welcomes you to giving us a shot. And we also have a great in-house chat room where people are collaborating every day, sharing ideas. Also, I know there's probably times during the trading day you might wish you could ask Blake a question or know what he's doing after phase. He shares it. So if you want, he spends time there. Blake said at times he spends more time with the people in the chat room than his own family. I don't know if that's an exaggeration or not. Let me ask him. Are you exaggerating?
I'm not. I would say during the summer months, I spend quite a bit of time with my kids.
Okay.
But definitely during the winter months while school's going, I mean, I spend more time in the chat rooms chatting with people than I do with my own
you
family.
you
So
poor orphans.
yeah, I know.
Yeah. All right.
Yeah, it's all right.
But I bet you see them when they need a few bucks, no matter what. If
Yeah,
you're busy, huh?
nope. I always see them for that. Yeah,
Yeah.
they're always there. Hey, today I got a couple of things I want to talk about, but there's one
Cool,
thing
bro.
that we were discussing in, well, there's a few things I want to make some observations here.
Okay.
You would let me make sure I'm at the where my screen's got. Every time I do an update, we did a Windows update last night. Well,
Oh
I mean,
yeah.
I did. It
Yeah.
forced me to. And so then my screens are all screwed up. So if normally I'm sharing screen one, it's now switches to screen four and then the screen six. It messes my video card up every time. So I never know if I'm sharing the right one. Can you guys see my charts at
Yeah,
all?
you have Euro up there that's been
Okay.
grinding lower 5 pips a day.
It has. It's so annoying. And we're actually reaching the support zone. We've been talking about this double top. I
Yeah,
was
I didn't
waiting.
think it would get down there.
I was waiting for
Right.
109.70. A couple guys are buying it as we hit the 618 today. We
Okay.
were hitting the 618 yesterday.
Right.
We hit the 109.93 level. We were at, I think, low is like 95, and I didn't buy it then, and I didn't buy it this morning as we dipped to the to just below 90.
Could it be
Um,
Euro pound pressure?
I think that is playing into it.
Okay.
Yeah.
All right.
The German GDP numbers, the advanced GDP numbers came in better than expected. And it's interesting. Amanda was like, maybe the euro is falling because now the market doesn't think that we're going to get any fiscal stimulus from Germany. And I'm like, oh, that's a good school of thought, and this is like a couple hours ago. Then German Germany Schultz said Germany Germany economy not in crisis, no need for stimulus now. That came out about an hour after Amanda said that, and oh wow, good call, Amanda. So it. Can the euro continue lower? I think it
She's
can.
got her own Rudy Giuliani scouring all the financial centers in
She
Europe.
does, she keeps track of all of them on her cell phone too, to show everybody. That's a joke. For those of you that, never mind. You'd have to see some of the clips of Giuliani showing proof on his cell phone. Anyway, bad joke. Uh, so we've got the euro dollar. It's drifting into the support zone. Personally, I was trying to buy it a little lower at 109.70 if we can see it. I don't know if we're going to see it though. I mean, you got some of these spike lows from back here in mid-October. Maybe we just go from double top to double bottom here. I don't know. So I'm willing to buy it down here. I'm not necessarily willing to put my toe in the water right now. You'll notice how the euro dollar may be finding buyers here, but is it really bouncing? Are we seeing an aggressive bounce? No, that we are not. So therefore, I don't think that there's a lot of demand for the euro right at current prices. Maybe we need another 20 pip dip before buyers step in like myself. But I think it is something worth noting. All right. Also, one of the other things that Coach talked about was the yen. Yeah, the yen. This is our chart of the day yesterday. If you don't use forex analytics, you can follow along the blog where we have, a chart of the day. Here's the US dollar, Japanese yen, talking about this exact chart where we rejected the neckline of the big inverted head and shoulder pattern. We're at ascending wedge support. 108.50 is going to be huge. I mean, we've dipped we've dipped to 56 this morning. We're starting to find buyers. People are trickling in. Talked about it yesterday about it being more of a value play to hedge a portfolio. If you want some cheap insurance, you just buy some yen. And the dollar yen has been drifting lower since our discussion yesterday, about 24 hours. It's not like it's gone very far. It's dropped about 20 pips from where we were at yesterday at this time. But the fact of the matter is, if you see the stock market sell off, the yen might actually strengthen a little and break us through the support. Now, there's a big question mark on why is the stock market so strong, but the dollar yen so weak. And I think a lot of that has to do with yields. And as Coach was just talking about, you got your 10-year here. Problem with this 10-year is we had broken a year-long trend line. We had a bear flag setting up, but yesterday, I warned you guys, if we break back above this flag, then that's gonna void this bear flag. Now, if you use Forex Analytics, and you go to the 10-year here, oops, I didn't mean to do that. Well, I'll just go click over to it. It's so hard to see with this blue. Oh, here we go. Here's the 10-year. So if you go to the 10-year, you see that was the chart that was setting up, and the warning yesterday is still trying to develop a bear flag. But if we could nullify the setup if we break 129 level and back through the broken trend line, bears be careful. We are above 129 right now, and so the risk is that bonds continue to rally here, and then we have nullified that bear flag setup, and that sets up for a reversal, which Coach said that you got to look at gold, and you got to look at the yen. Obviously the dollar yen I'm watching very carefully at 108.50. As I mentioned to you guys yesterday, 24 hours ago, I said I've got some short exposure in the dollar yen. I'm actually looking to add to that exposure on a break below 108.50. A daily close below there. Just to give you an example, you can see if you go to, you can use the risk management calculator in dollar yen or in Forex Analytics. Let's say you put your stop at 109. Let's just call it 109.15. Your entry. I entered some at 108.85. If let's say I get in some at 108.40, my cost average would be, let's say it's about where it's at right now, 108.65 roughly. Target, for me, I'm looking for a target somewhere down here to 618 retracement, which would be 106.35. Really, like 106.35. So let's say you're trading $1 million. I'm just going to use that as an example. Just so we can get our risk reward out there. You're risking 1 to make 4, almost 5. So, that's a decent risk reward. If, you're talking at current levels, you're risking maybe above this trend line here at 109.15, and your reward, risking, let's just say risking 1 to make nearly 4, right? So, that's not a bad risk reward. It's not even a bad risk reward if you're down towards 108 by the time you end up getting in.
Great tool. See, so you keep proving me right. You really don't have to go anywhere except your trading platform to have all your tools on our site.
I use this quite a bit. I use this risk management calculator quite a bit because I have a certain amount of money I can only risk per day. So I'll sit here and do things like this. I'll go, okay, if I'm going to get in this trade, my risk is 23 grand. I'm looking to make 105,000 on this trade. Those are the types of calculations I do all the time, and I use this risk management calculator a lot.
Keeps it real for you.
It does. This way, I always kind of know what my risk is, where my stops are at. So but that's why this support's so important. Now, I know Stelios and Steve are here. I want to ask, hey guys, so let's talk about something. Steve, are you here?
No,
absolutely.
He is. Okay. So last night we had some Chinese data. The industrial production numbers came in. I mean, talk about horrible. They're horrible. Notice the lack of reaction in the market. The market didn't really react a whole lot. I mean, stocks, I think I saw
the exception of the Aussie.
Well, the Aussie reacted because of the weak jobs numbers, but yes. I saw the dollar yen move down like 10 pips when that number came out. I was actually driving when it came out. I was driving from my kids' soccer practice, and it dropped 10 pips, popped back up, and didn't really do much. Now, here's the conversation I was having with my office and then our traders in the chat room. So I was talking to the guys in the office in Greenwich this morning, and I'm like, so how do you guys feel about China? I'm like, I'm starting to get a little weary about a deal actually getting done by the end, here soon. And we're starting to see the leakage in yields. We're starting to see the rally in bonds. You're seeing, copper's coming down this morning. You got dollar yen's approaching pretty key support. Stocks are still holding up, but we're starting to see leakage in other places. And I asked my office, I said, hey, what do you guys think? And they're like, well, China needs a deal just as bad as we do. And then I was thinking to myself, do they?
In my opinion, they don't.
Okay. So I kind of feel like they don't either, but then you saw the data overnight, the IP data. It's like, okay, it's a huge miss. So I'm going to ask you both. So
who has more experience with hardship, the Chinese population or the American population?
That's a great point. Yeah, and China's obviously the correct answer. But I want to ask you guys: do you believe the Chinese economic data as it's being released?
No.
You don't?
Absolutely not.
I think, okay, Blake, you also have to see the volatility of this number. If you look the past 5 or 6 readings, we're expecting between 5 and 5.5, and it's come in 5, 6.3, 4.4, 5.8. So it's quite volatile as well. So I guess the market's probably expecting a rebound in the next print, because that's how it usually happens.
So if you don't believe Chinese data when it's good, do you believe it when it's bad?
No, you give much less weight. Yeah.
Okay, so if you don't believe Chinese data, which I don't, by the way, I'm not a big believer in Chinese data is always accurate. But let me ask you this: if you're China, would you want the U.S. to believe that your data is weakening?
No.
If you're trying to game the art of the deal author, if you're trying to game him, and you show him that China's weak, China's data is weak, when it really isn't all that weak, but let's just show it to him that it is weak. He's going to think that he's got leverage, he's got the upper hand.
Yeah.
He can continue to negotiate and he can continue to push. When China, maybe their end goal is, let's just let him wait it out. Let's let him be his own worst enemy in this situation. We, being China, I'm just playing, devil's advocate here, and I'm playing China. We can wait it out. We can wait it out, but we want Donald Trump to believe that we need this deal just as bad as he does. But in essence, do we really need it?
I see.
If I'm China, I'm going to play, I think China and
yeah, let him think he's winning when he's losing by doing this.
Right.
Got it. Boy,
what do you think, Stel?
You have a twisted mind, Blake Morrow.
That's a good point. The flip side, he does actually. The flip side of that, though, is if they did the opposite and showed something really strong, then that would put pressure on Trump to, maybe take a little step back that he shouldn't, that he wouldn't have otherwise. I mean, I don't know. It's a tough.
Blake, something. I'm sorry, Stel, but something that backs up your reasoning. You know, having been a commodity broker for decades, anytime there was an announcement that China is buying something, it created more buying in the market. And I was always suspicious that they were using that to distribute. And when they said that they were going to be selling something, it was usually pretty close to a low where they just wanted a better price to accumulate. So they've played that game in the commodity market forever.
There's this so I guys, I don't know what I don't know. You know what I mean? I don't. But I want you guys, this was passed to me a couple weeks ago. Let me grab this. I'm gonna put this YouTube video in the chat box. Just give me a second. Where's the chat box? I'm finding it. Just give me a sec. Q&A chat here. I want to put this in the chat box so you guys can watch it when you get a chance. Let me just make sure that's the right. Yeah, that's it. It's a really interesting video that it's on the China Cold War. There you go. I just put it in the chat box. The Chinese Cold War, China-U.S. Cold War, and it's Bass and the hedge fund manager. I'm trying to think of his first name right off the top of my head, and then old general, Air Force general, who is like the Chinese-U.S. liaison. I think it's really interesting to watch just to understand.
I've seen it. It's a little bit is good.
Yeah, it's on Real Vision. It is really good. Just give you a little bit of.
Yeah, I've watched it as well. It is interesting. Yes.
Yeah, very, very good video. And I think those of you at home are gonna. It's an hour. It's well worth the watch. I watched it on a Friday afternoon, actually, after the market slowed down, a couple 3-4 weeks back, or whatever, when it first came out on Real Vision. But you guys should watch it. It's a good video. It kind of gives you like the Chinese, maybe, point of view on what they might be thinking. But I guess the reason why I'm pointing all this out is because I'm seeing leakage in the market where stocks are immune to this, but you see the dollar yen that's coming into some pretty good support. You see yields that are dropping again. I think it's gold starting to firm up. These are a little bit of warning signs, and I don't know if I was the peso, that a lot of that was the Chilean overflow, but still, I bought the dollar max yesterday at 1935 when it dropped down here. I sent an alert out with an update with Forex Analytics when we hit this, and I picked it up and made just a few pips, and I knew I should have hung on to it. I was like, man, that is the right spot. I bought it at 35, and I think we dropped down to like 34 and change, and then I just didn't stick around because we just didn't bounce a whole lot, but that was the right spot. Anyway,
I put the link, by the way, to the interview on chat, Blake.
Didn't I put it in chat?
I did.
I did too.
Oh, sorry, I didn't see it. Okay, yeah.
Yeah, I put it on YouTube. It's on YouTube, so.
Yeah, I put the link on Real Vision, whoever has it.
Yeah, but some people don't have a Real Vision.
True.
Account. So anyway, all right. Well, I'm going to pass it over to you guys. I just thought, interesting topic of conversation when things are a little slow. I want to wish everybody the best of luck today. Watch the dollar yen as we approach this 108.50. I think it's going to be extremely pivotal. And you guys have a great session. Thanks everybody for being here.
Thank you, Blake. Thank you very much.
Okay. Hey, Dale.
Hey, buddy.
How you doing?
Good.
Good.
Ready.
Okay.
Ready.
Do we have any numbers? We don't, right? Actually, no, we do.
We do. Quite a few of them, but
yeah, of course.
But okay, I seriously doubt that they're going to move the market. But let's put it up here. As you see, we have initial jobless claims, PPI, core PPI, continuous jobless claims, new housing, and Canadian.
Jobless data is irrelevant now, I think.
Yeah, more or less it is, unless it's like a number,
outlier,
a huge outlier, like it's going to be like 30K instead of like.
Yeah. Okay, let's have a look at that. Then we talk about a couple of things.
10 seconds, yes. Let's see.
Nine.
Okay.
Blast off. I feel like I'm watching.
Better
Cape
than
Canaveral.
expected. So PPI 0.4 month on month versus 0.3. 0.1 better everywhere, basically. Okay.
Yeah, so yeah, inflation data higher, initial jobless claims a little bit worse and higher, which is worse, but I mean, nothing to write home about. 225 in comparison to 215 expected, so it doesn't make any real difference. Canadian new housing pricing index 0.2 versus 0.1 expected. So yeah, PPI pointing to higher inflation. We already discussed yesterday, Stelio, that core CPI has persistently remained above target. Of course, the Fed is completely unwilling to do anything about it, and I believe they're not going to do anything about it, even if it starts approaching 3%. They will just, keep repeating all about the symmetrical target, and that that it might be temporary, and I don't know, whatever else. They will try to pretend that they can do something about it if they want to, when we know that they actually can't do anything even if they want to, because they have to choose between the two. Either stop stimulating the economy, increase rates, which is going to immediately bring a recession, or just let inflation do whatever it wants to do.
Steve, since we're streaming also on investing.com, you know how you always ask me for requests I might want you to take a look at. Maybe we could go over some individual issues, equities that have been leading this charge up till now. I'm interested in your view on Mr. Softy, which broke out of that wave 4 triangle, and what you're seeing in things like Apple and a few of the market equity leaders that might give us some kind of tell as to what's going on. Look under the hood of the car.
Sure, go ahead and ask me for specific stocks, and then we're going
All right, let's start with Microsoft.
We have a friend here asking, do we have a recorded video of this webinar? I'm kind of swamped, etc., etc. So let me tell you that you have two options. Option number one, you can go to a few hours after the webinar. It's always posted. Option number one, you can go to our site under webinars, playlists. You can find everything here. Option number two, you can go to YouTube and search for Forex Analytics. This is our channel, so you can find everything here. Okay, so you can do either of the two. Okay, so coach,
in there. Yeah.
Tell me what.
Let's look at Microsoft, because remember every break over the last 6-8 months, it really never succumbed and kind of held the market together and was always the one making new highs. And so I'm interested in what you're seeing here. So we're still in the wedge. We haven't gotten to.
If you remember, we warned that was clear. That was likely a runaway gap, which it was. I mean, this is a beautiful technical formation. You get a lot of confidence when you have a well-defined formation. In this case, it was a rectangle, a range. We gapped higher, and we never turned back. So this is a bullish breakout, and to fulfill that range's target, we need to make it to like 150, 151.
Okay. Could be there in a day.
Which is also going to bring us quite close to this potential ascending wedges resistance.
Yeah.
So that's going to be an interesting target for Microsoft for sure.
Okay, so that's been one of the strongest stocks if you look all the way back. So
absolutely.
When this one starts to look
heavy,
look at this. Yeah.
We're talking about a seriously,
and it's a huge market cap to move it like this. It takes a lot of money to move Microsoft, unlike some of these smaller market cap stocks that they can move. Okay, FANGs were the darlings, so we're at new highs here, Steve, in the averages. how many FANG stocks are close to their highs? Maybe take a look at a couple, and maybe Facebook and Netflix. So many of them are way off their highs. And it's interesting to me because that led the market all the way up for a long time. Are you there? Hello.
Hey Dale, Steve got a blue screen of death on his computer, so I think he's gonna reboot. Actually, this I can take a couple of minutes just to
go ahead, buddy.
Talk about a couple of things that happened overnight and this morning.
I'll be Volgi. Go ahead.
Yeah.
So
sorry everybody.
The
The screen is going to be stuck there, but I'm gonna. Okay, so we had a few things this morning and overnight. We had GDP out of Japan, which came in 0.1 worse than expected at 0.1%, but the revision for the last quarter was 0.1 better, so that was a bit of a non-event. We had employment numbers out of Australia, which were negative, so that was quite a bit worse than expected, and that's the main reason why the Aussie has been pretty weak today. And the other important thing is that Germany is not in recession. We were expecting another negative quarter, slightly negative, expecting minus 0.1 to get a technical recession because the previous quarter was also slightly negative, but came in at plus 0.1, so that was narrowly avoided. Is everything fixed? Absolutely not. But for now, people can say that there is no recession. And what is Steve saying? Nothing yet. I guess he's rebooting. Also, EU GDP, quarter on quarter, 0.2 as expected, and retail sales out of the UK, which came in slightly worse than expected. So that was it data-wise. And it's worth reminding people that we do have the Bank of Mexico interest rate decision in a few hours. They're expected to cut 25 for whoever is trading the peso, which has been quite active this week because of the Peruvian, was it Peru? Yeah, situation. And
I think it was Chile.
Sorry, Chile. Why did I say Peru? I don't know. Yeah, thank you.
Peruvian flake.
Yes, quite right. And so that was
anyway.
okay. So
I'm a bad guy.
You're a good guy, man.
I did bad things, but I was a good guy.
So while we wait for Steve, what can we go over?
Well, I have the screen. If you want to take it, we could see some macro charts.
Yeah, hold on a second. Let me.
And I'm interested. I know you're long-term silver bull, and I know you did some selling before it came off still. I'm wondering what areas you're looking at for coming back into it.
Sure. Okay, let me go here, share, continue, desktop, share.
There we go. Got him.
All right. So I always start my day by looking at the dollar index, as I've said in the past. This remains my view. I still think that the dollar will be having a little bit of a tough time in the next year or so. It depends on obviously how the US-China deal progresses and what happens in the elections. Let's not forget that the market's really not pricing enough of a risk for Elizabeth Warren becoming elected, and that I think would be a very a bad case for the dollar if she got elected. Now let's have a look. You talked about silver. This is there we go. Let's have a look at the weekly, which I always look at. Silver is a trade I've been in and out of many times in the past, past few years. And I drew these arrows a while ago. It didn't quite get to this point. I was actually waiting to get long around 1630, 1640. Just missed it, but I think there's a good chance we might get there. I did say a while ago when gold was at 1550 or 1600, something like that, that I think that I think that gold might retest the breakout point, which was around 1360 to
You did say
1380,
that.
depending on how you draw it. And
Yeah.
I think that there is still a chance. And you know how metals, oh, Gregor should be there in a minute, he said. Steve says, okay.
Okay.
There, you know how metals trade and how they tend to go up slowly and then they get smashed down. So I think there might be another leg lower just to take gold and silver to the breakout point. Oh, Greg is here. Okay, Greg, if you can hear us, you can join whenever you want. I think there might be another a push lower, possibly as the US-China situation gets resolved. That could be something that. Can you promote Greg, please, Dale?
Sure.
Yeah, thank you, because I think he's here. So I think that might happen. If that happens, then silver might, we'll definitely get to 1630, 1640. We might even go all the way down, depending on how long it takes. It might go down to 1560. I'm definitely going to be looking to get long at this zone around here, 1560, 1570, if we get here, 1580. So that's this remains my view for silver, and it's quite similar for gold. And I did draw this weeks ago, and see, this is my, this was my first view that I thought the pullback might be smaller, but it looks like we might go and test that zone there. And I think that will be an absolute gift, because your downside, your risk is quite well defined. You know that you're wrong if we go below, 1340 or something like that, for 1345. But if it does bounce, then you're looking at, $100, $200, you could easily get back to, 1550, 1600 without even blinking. So that is still my look here, and I think my view, and I think there's a good chance that this might happen.
Okay, Greg is promoted, and Greg, your mic works?
Yes, I'm here.
Okay.
Hello, Gregor.
Hey, what's up?
Okay. Very good.
Where is Steve today?
His machine got the blue screen of death, so I don't know if he managed to restart it or not.
Oh, really? Okay.
Okay, I stopped sharing, so you can take over whenever you want. And
yeah, Greg, just go through what's on your radar coming into this week. I think that maybe we completed your interest rate scenario you talked about last week.
Yes, I have a list here of what I'm planning to cover. So,
you'll give me. I'm looking forward to you both confirming what I'm doing, and also giving me some consideration to liquidate what I'm doing. All right, buddy.
We'll see how it will unfold. So the 10-year US notes, if we just start with this one, just a second. Okay, so the 10-year US notes futures came down into this trend line support, as you can see, and so far we are reversing nicely away from it. We also touched this 38.2%. And what I really like is that we just haven't seen a continuation lower when we took this September lows out. So this reversal may suggest that actually we have really found an interesting support here and that we are going to see more upside. Now, if that will be the case, okay, then we know that yields should come lower. So it may, the S&P 500 or stocks in general could found a temporary resistance, at least temporary resistance. We also see wicks here that is trading at this very important trend line. Okay, nice. At the same time, we see the S&P 500 at this resistance line.
Yeah.
So, and here you have in the middle the 10-year US note. So if this market is really, the 10-year US notes is really going to see more upside, I think that stocks, if not going lower, at least they will stay sideways, maybe in consolidation. So if we go to the S&P 500, there are obviously a lot of different wave counts possible at the moment. My primary wave count is still that we will maybe stop to this trend line. Maybe we are forming, we are now in the middle of this ending diagonal. So I would expect maybe a formation of a top in maybe already by the end of this week. We'll see how the price action will unfold on the smaller degree time frame charts. Here I have a triangle, and we know the triangle normally suggests that we are going to see the late stages of this current recovery, current lag that it's underway up from this October 23rd low. Okay, so at least, if not any significant decline, at least the free wave correction would be expected from a new high. So I'm thinking that the S&P 500 will see limited upside if the 10-year US notes are really going to continue higher. Even if I have some kind of a bullish interpretations, okay, like here on account 2, I'm tracking this, that we are actually in the middle of wave 3, I would still expect this fourth wave pullback from a new high. Okay, so I think that the 10-year US notes will be very, very important when we go further in time. So also another very important indicator for risk on, risk off should be this dollar against Chinese yuan. Okay, so we have here this one. I'm not sure, Dale, if we were.
Oh yeah, I got it. Yeah.
We were talking about this one as well last time, I think. We said that if we see this decline in wave C to find a support at this former wave 4 and at around equality level, and if the market will start turning around, then this could be actually suggesting that stocks in general could also maybe find resistance.
Yeah, I call that the trade war currency.
Yes, exactly. That's related to this, of course.
Yeah.
So I'm thinking also if stocks will hit are at resistance, if dollar Chinese yuan is at the support at the same time with the 10-year US note, I still think that maybe gold can be very interesting. So if we're looking at the gold here, we have seen a very nice deep pullback. Okay, I see this as a wave 4, and what I really like about this consolidation here from September highs is that actually this was a triangle in the middle of this pullback that we are tracking. So this cannot be wave 2, and if it cannot be wave 2, then you know the whole structure is probably corrected because you're not in a wave 3. Okay. However, on the intraday time frame charts, on the 4-hour chart, we can see some kind of a recovery, but nothing so powerful yet. So what I would pay attention on is on 1480 level. Okay, why this level is important? Well, let's say I will show this. I will hide this one. Okay, now let's say that this is still some kind of wave 1. Wave 2, and you are now in a wave 4 and you expect a weakness into wave 5. And let's say you want to be long. I still think that here to be long and you put your stop loss at the lows, it can be a little bit too soon. Now imagine yourself when you see market moving to a new swing low and then market finally reverses to the upside. That's why it's very important to wait not only on confirming price action, but the important price level to be taken out before you may say that bears are really done and that bulls are taking over. So if you see an overlap with the wave 1, which is at 1480, then this bearish impulse interpretation would be invalidated. So in such case, we would have more reasons to why we could start to looking straight to the upside. Okay, so I think that 1480 is really going to be a very important level. And I hope I hope that we will maybe see this level by the week close, okay? And maybe if we get a weekly close above this 1418, then of course, this would be probably a very nice reversal candlestick formation as well on a weekly basis. So this is what I'm waiting for. And if I see this level, definitely I will watch a pullbacks and will look for potential longs next week.
Okay.
Okay. Now also, when it comes dollar to Chinese yuan, another market that I'm tracking is Aussie dollar. Now, Aussie and gold lost correlation. Okay.
They sure did.
Yes, but dollar Chinese yuan and Aussie dollar are going perfectly. Okay, we have seen this correction from end of September on dollar Chinese yuan, while we have seen at the same time this corrective rally on Aussie dollar. So we can imagine if this dollar Chinese yuan is really headed higher, that Aussie dollar could come under pressure. And I really like this wave count. It's an ABC for wave A, new drop to a new low here for a wave B, just a minor one to take some lows, to take some stops out, and then you had a 5-wave rally. Okay, now we are reversing already to the downside. What I really like also is that these traders will try to look for Aussie shorts also when stocks, so when the risk-off mode will be seen. And what I like is that if I'm really correct with the stock market, it will hit the resistance and that we will see sooner or later a bigger pullback, then Aussie dollar, which is already weak now, will be even weaker. So I really love how this Aussie dollar at the moment is rolling out itself. It looks like that we are already in some kind of a bearish impulse that is still in progress. So if I would label this wave count, I would probably look for this as some kind of wave 1, 2. Then you have wave 3, and of course I would pay attention for a wave 4 pullback and then catch weakness for a wave 5. Okay, so I really love how this one is.
Okay, so Greg, at the 69.29 area after that bounce that you had labeled red B, this is C. So was this whole thing a 4 and we're going to get a final capitulation decline to new lows?
Yes, of course.
Okay.
Yes, I'm looking definitely this market. I mean, Aussie in general is so weak. I'm not sure if you look at crosses.
Yeah.
I mean, pound Aussie, we can look at this one as well.
Even against the Kiwi, Aussie Kiwi has been massacred.
Yes, has been, yes. So, I mean, Aussie looks really, really poor here. Where I have this, here's pound Aussie. Oh, pound Aussie made this nice pullback. It was wave 4. We haven't seen an overlap with wave 1. Looks like that we are in a wave 5 now, targeting new highs here. Some pips are still 300 pips away. The only question is if maybe we'll get some intraday pullbacks here to be considered as a wave 2, and then you try to go long. But you know, cross pairs, when they are on the move, can be very, very sharp and volatile. It's obvious because cable and Aussie are diverging. So I'm not really sure if we really get this pullback. Okay, but I mean, the picture is clear. I definitely think that these highs from October will be taken out. Now, also, I have here pound cat as well. Also looking bullish. This was wave 1, wave 2, wave 3. We are in a wave 4, expecting market to push higher for a wave 5. Okay, so those commodity currencies are really not looking good at the moment. Also, we can look at cable since we are talking about pound. Now, cable here on the 4-hour chart, what I see is a corrective formation. I'm not really sure if this is maybe a wave 4 of a smaller degree, or we are already in a wave 4 of a higher degree. It's still the same picture. I see a corrective setback and expecting more upside, which means looking for a break above October highs. And maybe already this wave 4 is finished here, okay? Because we have seen a very nice, here we have an intraday chart, very nice rise, possibly for a wave 1. Now we are in a pullback for a wave 2. 61.8% is the level you want to pay attention on. And obviously, as long as we are above this short-term invalidation level, above this is 27.67, I think that more upside could be seen. Of course, alternate count is also possible, which shows the idea of a triangle, but still the same thing. Even if you are in a triangle and you expect just a temporary rise towards this upper trend line resistance, you would still need a wave C here, sub-wave C of D. So I'm thinking that this market could actually see some pop-up in price here, at least in the next 24 hours. Now, what I have, when the stock markets is, or I should say like that, if the 10-year US notes are really going to see more upside, I would avoid yen pairs for now, okay? Because I see that maybe some euro yen, pound yen are still looking promising for more upside, that we are now just in some kind of a corrective phases. But generally speaking, you really should be more focused maybe on dollar yen. Dollar yen is now is not that clear, okay? I mean, this decline from November highs is not an impulse, and it has some overlap. So I'm not really sure if this is going to be a corrective lag, or are we going to see more extended weakness to be some kind of an impulse. But this just gives me an idea that dollar yen somehow is not really convinced if it's going to go higher, because of the 10-year US notes that are definitely suggesting that sooner or later dollar yen will find a top after all. So just not to get too complicated here, the fact is that there are different wave counts possible, okay? The first wave count suggests that maybe this trend line resistance will hold now for this wave B support, and that we will see a final push, 7th leg of recovery here to complete this whole corrective recovery around 110, maybe 110. The next wave count is that I like it more because of the 10-year US notes. What I see here is potential leading diagonal, okay? And now if this trend line, that's obviously the same trend line, if this trend line will be broken and you get a weekly close below this trend line, then I will go with this wave count and expect more weakness. Of course, if this trend line will be broken, then I think that 10-year US notes would probably be even higher, and I would be even more confident that we completed or put a low in place, okay?
Okay,
So,
Greg, if this is the case, the whole thing looks like an ending diagonal. If you look at it that way, would it be corrective, or could we expect C to be taken out all the way back into the August timeframe? Since it's a wedge, maybe we could retrace everything.
Actually, I would say if this not ending, I'm labeling this as a leading diagonal.
Oh, leading. Okay.
Yes, which means it's a first leg of a
big bull move.
So that would be wave A. You would expect wave B.
I see. And then C to like 120?
And then C up, yes. But let me go to the weekly or daily. So what we are tracking here actually is a wave D. Okay, so wave D, I think it may touch this upper trend line of resistance.
That's your 110 area.
That's around 110.40, yes.
Okay, all right.
Around there. The only question is if maybe this is a leading diagonal for wave A, and you will see wave B and then push to the upside, or maybe that will be a double zigzag.
Okay, but and then you get an E.
Yes, exactly. But in both cases, I think that upside will be limited. So to answer your question, I don't think we will take this low out, because
that's a huge triangle. I mean, if you're just a classic technician, you got to measure it from 126 to 98. That's like 28 handles.
Yes, and looks like
the breakout.
Yes, and actually this triangle.
Oh, look at your C up there.
It looks like this triangle may not get broken, or maybe even completed until middle of 2020. So you may easily stay here in consolidation for another.
That implies eventually a real big, if we break out to the upside of this triangle, Greg, would you say that implies a big bear market coming in the bonds?
Yes, and I would
break out, I mean, rates heading up dramatically.
Yes, and of course, at the same time, I would look for euro-dollar weakness as well, which after all, I'm seeing it in a corrective phase now.
Okay. Great presentation in 20 minutes, buddy.
Thank you, man. A lot of things, huh?
Yeah, it's great. I mean, I love your work, Grega. Much respect, and thanks for coming in and bailing Steve Volge out for having, you know, 20-year-old equipment because he's just won't spend any money and he's still using, I don't know what, I forgot, what's an old computer? A Compaq. Maybe
Yes.
he's got a Compaq. I'm kidding.
Commodore.
Commodore. Yeah, I remember those too. All right, brother. Thank you, Grega.
Thank you, man.
All right.
Enjoy, everyone.
Thank you, Gregor.
Thank you.
Oh, I still didn't know you were there. Okay. Thanks for listening, Still. Okay, let's see.
My pleasure, man.
All right, Tracy. Thanks for hanging out with us today. I'm really looking forward to talking to you. And I'm going to unmute you.
I'm a fan of Tracy as well, actually. Very
You're
happy to
what?
have her. I'm a
Hi,
fan
guys.
of Tracy. Very happy to have her.
You love Tracy too? Still?
I'm a big fan.
Okay. Anyway, so we need some 8x10 autographed glossies of you, Tracy. So, are you going to share your screen, or you want me to
So
just move
I
around?
want you to, yeah, I'm on my phone, so I need
Okay.
you to
You
just
got
pull up a 4-hour crude chart.
Okay, let me share it.
Will I be able to see it?
You should be able to see it.
All right.
Can you see mine? Right here. Here's
Yeah.
your. That's a 1 hour. Here's the 4.
Yeah.
All right. So,
that's-
are we coming out of the range to the upside, Trace?
So yeah, I mean, I think so. I mean, if we've been consolidating in this area really since
The whole month.
they announced the Aramco IPO, right?
Right.
And kind of part of my conspiracy theory is that that they kind of want, while they're bookmaking for this IPO, that they want oil prices stable. So I think, we've kind of been in this range is a little bit suspect, right?
Right. So it's a rectangle.
As far as that, so yeah, so we have a rectangle up there, but it is a bull flag, sideways consolidation. So I do expect it to break to the upside.
So just a technical measured move. It's about a $1.60 range here, Trace.
Yeah.
So I'm going to ask you if we get through 57.80. I think you're talking 59.40. Is that a reasonable target?
And, yeah, actually, if you squish that chart in a little bit more, we kind of have a channel forming from the bottom low on. Let's see.
Let me try and be Kreskin here. So this is my attempt at reading your mind.
Doing my channel. So it would be like on, from that.
How about this?
That, yeah, right there. And then you can do one above, right? And so the top of that trend line above is exactly a measured move, in other words.
I see. So you're talking about...
Yeah,
you're talking about a return line here, something like this.
Yeah, right.
Oh, okay, I did. I read your mind. Okay.
There you go. So,
all right.
I think that we can hit the top of that trend line, and at that point, it is possibly bearish ascending wedge. So we could.
Yeah, and that's 61.8 right there, Trace.
Right, and we could
look
drop.
At it.
Exactly, and then we could drop, into December, which fits seasonality anyway, right? Because generally we see a downtrend, in December, just because they, because of tax reasons, companies just,
When's the IPO supposed to hit the street?
So that's supposed to, bookmaking is closed on December 5th, which is also the OPEC meeting, and then trading is supposed to begin December 11th.
Okay, so we know that once that's behind us and it's out there, then their price sensitivity, since they've gone to the register, will not be as high.
Right.
Okay, So,
that's a good way of saying it.
yeah, I'm trying to be polite. So
Right,
those
exactly.
greedy guys that sell their IPO to a bunch of bag holders, then they
Right.
can hedge the hell out of crude and take it down to 43.
Exactly. And it all fits. I mean, in a perfect world, it's going to work that way, right? But,
Yeah.
we all know,
Yeah. So, anything else on your radar? I know you do a lot in energy, and are any of the products giving you any market tells, or is there anything related to the dollar, what's happening here domestically, that's on your radar? I know you talk about yields a lot, Trace. I've seen some of your tweets when gold was getting hammered. You said it's all about yields. You have a view on yields?
Exactly. So, I don't at this point. I mean, I think that we probably can see a reversal, but we're kind of coming into resistance here, like 1472, 1475 in gold. So we might get a pullback here. As far as gold is concerned, I'm not sure how that, I don't happen to have I don't have a yield chart up right now. So.
Okay. Well, here's a yield chart. If you could see my screen, I don't know. You're in here, so you could see.
So, I mean, it's possible that it pulls back a little, but I mean, it still looks kind of bullish, right?
What, this chart?
Yeah,
it could. It tried to close above an ascending triangle line. The bears would say this is just ABC. We're complete and we're heading down again. And the bulls looking for higher yields would say, yeah, the bottom's in. I don't know if the bottom's in.
I don't think the bottom's in at all. I think.
But okay, so we could just have a continuation of a bear market rally. And,
just a little bit more perhaps, and then and it looks like just a little bit more, unless it's rejected here. But I mean, that still looks like a bearish pattern to me. I don't think that.
Well, okay. And okay, any view on equities? Do you ever do anything with indexes?
So yeah, I mean, I trade indices. So I mean, as far as
just
right
scalping.
now. Yeah, I mean, it's not, it's day trading that. I mean, right now, if you look big picture, again, we're kind of in a consolidation as well. So, either we, go higher and then have a bigger pullback, or we pull back here. But I mean, overall, it's bullish.
Okay, well, I could tell just from your tone of voice, your highest conviction trade, and it's kind of like your specialty is WTI. Is that correct?
WTI. Yeah. I mean, because I trade that on a longer term and shorter term basis.
Do you believe this, Trace? Everyone thinks they have to be a portfolio type trader and be in a bunch of different instruments. And I always use the example when I was on the floor of the CME that I knew guys that never left one trading pit, that had their chauffeurs pick them up after the close. And all you really have to do is know one market well to be successful, instead of knowing about 20 instruments?
I mean, I think it all really depends on your trading style. For me, I can't really trade more than, unless it's a swing trade or something like that I have a long-term view on, where I'm just sitting in it.
Yeah.
But, on a day-to-day basis, if I'm day trading something, like I can't focus on more than 2-3 products max. But that's just me personally. I know people that are all over the place. They're trading 20 markets at the same time.
I'm overwhelmed with 2 or 3.
Yeah.
I'm kind of like a one at a time guy.
Yeah.
In relationships too. All these people. I don't take multiple positions, Tracy. So.
Right. I hear you.
So, all right. So crude, really, it's all about this Saudi.
So it's all about this IPO right now, and the chart pattern right now, as far as I'm concerned, I still think we have, a move up, breaking out of this consolidation, and then, down into December, perhaps January, depending on
Oh yeah, that you just lit up a light bulb. We were down all last December and put in a fairly significant low at the beginning of the year last year.
Yeah.
So you're looking for maybe a repeat performance of that.
Well, I mean, probably not as drastic. I mean, last December, everything
Here we were.
kind of went south.
Why is there weakness in December?
It's weakness. Well, there's weakness in December generally with crude oil. It's because everybody starts winding down, like refineries wind down because of tax reasons. Because you're taxed at the end of the year. You're taxed on December 31st on how much product you're still holding. So refineries everybody wants to get rid of their product. So they, it floods the market with product.
Okay, I didn't know that.
So generally it pulls the markets out, but everybody's trying to get rid of everything because you don't want to be taxed on, you want to be taxed as little as possible. You want to be taxed on what you're holding. So generally that's why we see weakness in December.
Okay, so so it's tax loss selling and everything, including physical commodity markets. Being and trading from Canada, does Canadian come into play for you? Do you think a lot about what's happening? The loonie? Not at all. Oh
no, yeah, I'm short, CAD.
Okay, so
I've been saying that since last year. Somebody on Twitter said, "What's the one trade that you would be in?" And I said short CAD, and still be in. Like if you had to put it on today and you would, and stay in it for a year. I said short CAD, although it's remained very resilient.
Yeah.
But still, I think that, we are starting to sort of see some cracks. And so, I'm still convicted.
You have levels that you think it could go to? Could we revisit 120 again? That was a low since the end of 17.
Yeah, I trade CAD USD because I trade the futures.
Yeah.
So, I definitely think we could go see, 70, 68 again.
Okay.
Area.
Okay. Okay. Interesting on
if you're
that
talking,
too.
I'm just talking. It's the flip side.
Right. It's instead of how it is for retail FX, it's different in futures. It's reversed.
Futures, it's CAD.
Just like the yen. Same with U.S. dollar yen and the way it's paired up there. Okay. So I think we've covered a lot of the different markets here, except for. We've covered the metals, we've covered yields, WTI. A really interesting fact about what happens in December. I never thought about that before. And S&Ps, is there a recession up there in Canada? I'm hearing about all this weakness in Canada.
Not really yet. I mean, we didn't cut rates the last time. I think they're going to have to next time.
Okay.
But, it really, I think the thing to watch really here is the housing market.
Right? I was just going to ask you about that. Have prices been coming down?
So they've come down a little. But it's still, it's still a bubble. It's still, even though like all the Chinese money, started, has started leaving, right? Because as I said, get your money back here. But still,
where's the Chinese money going? Back to China? Or they repatriating?
Back to China, yeah. Basically, as I said, you have to bring your
Oh, okay. So it's under threat of who knows what, prison or execution. They have to bring their money back.
Right. So a lot of that money's left, the United States market as well. It's left Canada market. It's left everywhere. But so housing prices have come down here, but and they started upticking again lately. But they haven't come down enough to not still be a bubble, right? It's still ridiculously expensive, especially on the West Coast.
Okay, so on the West Coast of Canada, I know here on the West Coast of the U.S., which I never thought would happen, is that prices actually exceeded by quite a bit their highs of 2008. Is that what happened in Vancouver and the West Coast of Canada too?
Yeah, exactly.
Okay. And it was a lot of Asian money that drove it.
No, absolutely.
Okay. Are you happy with the election and your new government, which is kind
So,
of like the old one?
Well, I can't. I'm still a U.S. citizen, so
Oh, okay.
I can't vote here.
Oh,
So.
so do you mind me asking if you're a U.S. citizen while you live in Canada?
What? There
It's
was an
okay. You don't have to
opportunity
answer.
here, so something new, something different.
Oh, okay. And you like cold weather?
So I do. I didn't realize that. I thought Chicago was bad. Ooh.
Yeah. So is it colder than I grew up in Chicago. Is it worse?
Yeah. Yes.
Okay. So you're now hibernating for the ice age of 2019.
So yes. So I've taken to go. I've started doing that Florida thing during the winter, like January, February.
Yeah.
Take
Like
a
the
month.
Bears.
Yeah, you got to.
All right. Well. All right. Well, Shaya hibernates in the winter and heats up the markets with her commentary. And, I talk to people all the time, Trace, and I want to let you know that they say, well, Shy said da 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 da. Shy Girl said, I said, okay, all right, okay, all right. I anyway, your calls and your views help a lot of people out there, and I'd love to see your scenario unfold in the oil and get this push up towards that trend line that you and I drew together. Look, we're like partners. We were able to draw, so
exactly.
The top of this channel is what
I think, it will, I mean, is it going to go today? I don't know. Maybe inventories does it.
Okay. What was this candle yet? What was this yesterday? This candle, let me just, this one, what was this? Do you know? Was there a report yesterday that gave us this huge blue candle?
Yeah, that was API, which was clear. Okay. I mean, we had a draw of like 500K. I mean, it wasn't, that bullish. I think to me, the market feels like it wants to break higher and it will take any reason. It's
COT giving you any clues?
Actually, people are starting to add a little bit of logs. I mean, OI has been terrible. Open interest has been terrible. I mean, this whole year, nobody's had any interest in the oil market, basically.
Interesting.
So, it's besides the, geopolitical spikes that we've had, I mean, we haven't really, we've kind of been in a range all year, comparatively speaking. But there's just it hasn't been a lot of interest. So we're seeing a little bit of buying interest. But that kind of started with the announcement of the IPO. So, I think people are like, oh, IPO,
Well, it's only 2 weeks away that,
let's throw some longs on.
Yeah. That's, what is most obvious is usually obviously wrong. So really appreciate you coming in, Trace. And here is Tracy's Twitter so that you could follow her at CHIG, forget the I before the R. You could follow her here. Let's see, what do you have? You have a new website up now? What's this
link? I have a website. It's just shygirl.com. I haven't really updated it, but
I got it.
There's some stuff on there.
Okay. So you update this daily? No, it says September 15th. So
I'm terrible at it.
Let me ask you this. Do you update it quarterly?
So, kind of,
All right.
I usually post, like, if I post something new on there, I'll say it on Twitter. I'll say,
Okay.
But I am terrible at keeping it up.
All right. Anyway, if you want to know what happened on September 15th, you go to Tracy's. You know what? I'm going to bookmark this, Tracy, because at least I could, I see all your tweets. It's a good place to get all your tweets, and these are updated. These are live. So really appreciate you being here today and hanging out with us and drawing some channel lines in the WTI. And I want to wish you a great holiday season, happy Thanksgiving. And
you as well. Always a pleasure. Always a pleasure.
So, I give thanks to all the great people I've met on Twitter that I've interviewed, like you, Tracy. So I hope that pips rain down on you and everyone that your words touch. Okay. In
And
fact,
likewise.
okay, forget the
And for
rain. Let's
everybody,
make it
and to all of you.
snowflakes. Huh?
Snowflakes.
Yeah, snowflakes are pips for you
I've
all
got-
winter.
I've got plenty of those.
All right. Well, thank you
All
so
right.
much, Trace.
All right. Thank you.
Appreciate you being with us, and thanks for kind of giving me some confirmation about where I was looking to short the market in the WTI. So I was looking forward to collaborating on that idea with you. Thank you for your time today.
Excellent. Thanks for having me.
Okay, my trading warrior sister, Tracy at Shy Girl, bookmark her website so you're up. So people don't have to tell you, well, Shy Girl said this, so you'll know before they tell you. And that's a wrap for our Thursday. Remember, don't just count your rigs or your barrels of oil, count your blessings, and we'll see everyone tomorrow. Enjoy the rest of your trading session. And that's going to be a wrap for a Friday tomorrow. Thanks for your attention. And thank you again, Tracy. See ya.
All right.
Adios.